This is Matt Blume from Pekin Hardy Strauss, and I'm here with Josh Strauss. Today, we want to provide a little bit of color on this quarter's investment commentary. So 2.5 years ago, we talked about how uninvestable the bond market was in our January 2021 letter. And now it looks like we're actually reversing course on that recommendation. So Josh, can you provide just a little bit of detail here?
Sure. Good morning, Matt. Well, during the coronavirus pandemic, there was roughly $18 trillion in bonds across the world with a negative yield to maturity, where you're guaranteed a loss on your investment. And at the time, the 2-year Treasury reached a yield of less than 0.1%, and the 10-year Treasury yielded only 0.5%. That clearly was not a good time to make money in bonds. Now today, after 18 months of interest rate hikes by the Fed, short-term interest rates now are above 5%. All those bonds with the negative yield have now swung into positive territory, and short-term interest rates here in the United States are higher than they've been in the last 2 decades. Things certainly have changed, and short-term treasuries are a good place to deploy capital today.
It sounds like it. But so what's the risk here in short-term bonds?
Well, given that the U.S. government can print as many dollars as it wants, you have zero credit risk with U.S. Treasuries, and there's no currency risk as a U.S.-based investor. And with the short-dated bond, the risk of rising rates impacting the value of your portfolio is highly limited. Plus, with the fact that U.S. Treasuries are the most liquid market in the world, you can look at these investments as high-yielding securities that you can easily convert to cash if you want, with not a lot of downside.
Yeah, well, that certainly sounds attractive to earn that level of income without bearing any equity risk at all. So, I mean, you would think then that incremental capital would be flowing from stocks to bonds at this level, no?
Oh, I totally agree. However, I wouldn't put all of my money into short-term treasuries. There's other securities out there with significant upside that are worth holding or even buying more. But for those investments that you may own with limited upside, I would trade a portion of them out for short-term treasuries today.
That sounds spot on to me. Well, you can read more about this quarter's investment commentary at www.pekinhardy.com. We encourage you to go check it out. Have a terrific day.